Kate. G-Gal, what's happening? What's happening? Ooh, who do we have over here? We have Robin Hood, user. Cue the confetti. Oh, cue the confetti. Andy, Nano Shrimp, Ian, Marjorie, user. Okay. Fearless AI, Maurice, Juanito, ¿qué pasa? Lamons, Willie, construction. Good evening. And how are you today? I need my glasses. Here's my glasses right here. All right, so what are we doing? We're doing something that looks similar to this. Now, hold that thought. Mission Jacked, live allergy. Good evening. Ron, Brian Kells, what's happening? All right, let's start streaming. Okay, that works. Stop recording. Get that out of the way. Let's go to display capture and do this. And no. Display capture and no. Oh, yeah, okay. That's got to help. Got to help if I plug it in. Okay, try this one more time. Display capture. What? Display capture one more time. There it is. Bloody jolly good. And there you have it. Is that it? No, that ain't it. Yeah, that is it. Hold on a minute. Before we go much further, give me a dime so I can phone my mother. Oops, not now. That. No, not now. That. And that and that. Good to go. And right here. All right, live. Come on. And go live. And there we go. And that's there. Uh-oh, forgot that screen. All right, give it a second. That'll pop up any moment. All right, that's good to go. That's not quite good to go. All right, there. And there it is. Outstanding. There it is. Whoops, I gotta move this one over a little bit. Just a smidge. So we can see, yep, there it is right there. Alrighty. That means we're ready to roll. Just about. Got one more camera. And there you go. And there you go. Woohoo! Jolly good. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by The 10MinuteTrader, where I invest in dividend stocks for weekly cash flow. Good evening, Jason. Nizar, good evening. Mike, what's going on? English or Spanish? English, please, if you don't mind. Beth Reed, good evening. Miami, okay, whatever. Greetings. Uh-oh. Enzo wants to take a look at Lowe's. Enzo, not even a hi, hello, how you doing? All right, let's just get down to business. Way to go, Enzo. Lowe's. L-O-W. What does Lowe's look like today? Here we go. Simple, safe. Let's take a look. Here's the high. Here's the low. Here's where it was a year ago. Here's where it is now. Look at the motion. Up, down. Unfortunately, Enzo, we're in a little bit of a downturn with Lowe's. So it doesn't look that favorable. See, 30 days ago we're here. She shoots up, pulls down, looking for the bottom, Enzo. Soon as we find the bottom, it might be a good deal. I love Lowe's. How was the dentist? You know what? It was what the dentist was. You got to go there. You have to make sure that you're fit in order to go under the operations, all that kind of nice, neat, fun stuff. So I want to make sure I get there before I lose one of my teeth up in the front. It's like, who wants to do that? Horrible. Anyway, it was okay. Hello, can I see QQQ, please? Peter, can you explain to me? Peter, talking to you. Can you explain to me why is it you want to see QQQ? Because it doesn't fit what I'm doing here. Okay, so what I'm doing here is looking for a simple, safe, predictable, consistent 1% per week. Now, I do that specifically with pre-qualified dividend stocks. Now, a dividend stock is a company that increases its profits and helps and shares the profits with us, the investors. We are the investors. So they share their profits. I don't think the Qs are actually there. The bottom dropped today and wondering why. Okay. Now, Peter, I'm looking at stocks that I don't really care if the bottom falls out because I'm willing to hold on through them through thick and thin as long as they're consistently profitable, regardless what happens to the stock price. Because the stock price really doesn't have very much to do with the company's daily operations. Okay? If the stock is down, the CEO does not come across everybody's email address and said, "Hey, we had a bad report this quarter. Don't come to work." The CEO does not say that. It's like business as usual. How can we fix it? He doesn't call people and say, "Hey, we had a bad quarter. Stay home." He doesn't do that. Okay, what do we have over here on YouTube? GigaCat. I'm losing the stocks are invested are going down. Well, I can't help you out with that, dude. How do I make these bigger? Not me bigger. I wanted the words bigger. Anyway, I can't help you out with that because I only look at stocks that I'm willing to hold on to regardless if they go up or they go down. Okay? So the stocks that I like are companies that have been around 10, 15, 20. Oksana, is that the Oksana that I think, okay, over there in England? Okay, is that you? I don't know. Hello, Rev. Hello, sir. What's the purpose of this live? Well, Rev, what I'm doing here is looking for a simple, safe, predictable, consistent way to make 1% every single week. Now, I came up with a trading strategy for my 9-year-old daughter when she said, "Daddy, what are you doing? Can you teach me?" So when a 9-year-old asks you, how do you invest in the stock market? Well, first of all, she's only 9. Second of all, it's got to be simple, safe, predictable, consistent, and most importantly, no way for her to lose. So that's the 5 criteria I had to get over. So how do you do that for a 9-year-old? Okay, come up with some rules. 5 simple rules. Rule number 1. Now, this is an important one, and a lot of people the funny thing is, people have a tendency to gloss over the rules, not really pay attention to them. Well, they're there for a reason, and I told my daughter they're there for a reason. Rule number 1, never buy something you don't understand or you don't want to hold on to for the rest of your life. If you're not willing to buy it and hold on to it, regardless of what happens, goes up, down, or whatever, don't buy it. That's rule 1. If you don't want to buy it through thick and thin and hold it to the day you die, don't buy it. This is an investment, your hard-earned money. You work 30, 40, 50, 60, 80 hours a week to earn this money, however many years. Now, I've been working since 1973. I just retired 2 years ago. So it's not as if, I have a huge amount of money saved up. No, I have enough to make my life comfortable if I can get 1% every week off my investment. So if I have 100 grand, 1% a week is $1,000 a week, well, 50,000 a year. Okay, well, the more money you got, the higher rate of return. Not the higher rate of return. The bigger the return is going to be. All right, so I'm missing some questions. Hold up. Hey, ha. Okay. CACI, credit stocks. Okay, Jonas, for some strange reason, I'm going to hold this up for a second. For some strange reason, CACC doesn't make any sense to me. CACC. Yeah, it's a month. It's going to be a no. Hold that thought for 1 second. Yeah, I'll get to it. Hey, everyone. Hey, Michelle Lynn. How are you today? Bobby, fun, cool beans. Walter Dahl, what's going on? All right, so let's keep going back to here. All right, so CACC. Now, apparently you weren't listening, or I haven't said it yet. I'm looking for specifically stocks that have weekly options available. Now, you didn't know that, so I got to cut you a little bit of slack. But 20 June, 18 July, 15 August, 17 October, 21 November, those are all months of the year. So it being months of the year, well, that's a monthly optionable stock. Yeah, no, thank you. B-Rat Daddy, what's up? I'm up 91% in the first 23 weeks. Hey, holy shit. That's pretty damn good. Nabin, how you doing? Mac D, what's going on? JJ. So I'm happy for you there, dude. Cool beans, B-Rad. Okay, AZ Trader. Whirlpool is a monthly optionable stock. WHR. Okay. 20 June, 18 July, 19 September, blah, blah, blah. I don't do monthly options. Monthly options, the numbers just don't work. Okay? They just don't. So I don't do them. Okay. What do we have here? Country bloke. Country block or country bloke? Country block. Way to go. How you doing, brother? All righty. Return of the Mac. How you doing? Just there to support. Cool beans, online teacher. How are you today? Okay, Raphael, James, how are you? I am wonderful. It's 3 a.m. over here in Switzerland. Jolly good. I'm not on that weed today, but I am on. All righty, good for you. Do I eat? That's crazy. Okay. Daniel, how you doing? Jack, monthly options are way better. Sorry, but that's just not right. Uh-oh. Hold on a second. Now, Jacob O'Hara, did you say monthly options are better than weekly options? Because I need you to clarify that. Seriously, I do. Because I don't do monthly options because the numbers just don't work for me. If they work for you, great. Awesome. Love to hear it. Hey, David, long time no see. Well, we the people, my name's not David. I don't know where you got that idea from. KG, how often do companies that have monthly options change to weeklies? That I don't know. All right. Francisco, thank you. Would your strategy work with REIT stocks like Simon Properties? Well, it probably could, Tamiko. Okay, but I don't really use REITs. When you roll a stock to the next week, do you lose the premium for the current week? No, you don't. Okay, Dan, when you collect that premium for the current week, okay, when you buying, wait a minute, when you're rolling into the next week, okay, next week, well, you got to buy the option back. You don't really lose it, but you buy it back to sell the next one. And then when you buy it back to sell the next one, you're getting another premium on top of that. Okay, hold on a second. Better than weekly, I think. Oh, you had to throw in that weasel clause, dude. Do you know what a weasel clause is? That's when you make a statement and somebody questions your statement and you say, well, it works most of the time, some of the time, maybe. No, see, I don't mind people who do monthly options. It's great. Nothing wrong with that at all. I don't do them because the numbers don't work for me. Now, I'm going to explain it to you in a little bit and see if you like that. Live restricted for some audiences. Okay, submit feedback. Your live contains themes that some may find uncomfortable and has been restricted. Regulated goods content. I have no idea what that means. Regulated goods content. My lab does not contain any of that. Okay. Some strange reason, I have 2 TikTok channels. And the funny thing is, I'm saying the exact same thing because I got one camera here and one camera there. Okay, so how can this one over here, this is like the 3rd time it's happened, saying the content that you're describing is banned or sensitive. Well, if it's sensitive there, why isn't it sensitive here? Because it's the exact same platform. It's 2 different channels. That's weird. Anyway, so Jacob, we're going to take a look at that in a couple of seconds, all right? If you buy at the start of the month, then sell at the end of the month based on the gradient then it can defo work. Waiting for activation. What the heck does that mean? I have no idea what that means. Josh, Von Gray is said to forget it is a horrible strategy. Oh, set it and forget it is a horrible strategy. I'm going to disagree with you, but okay. Everybody's entitled to their opinion. Apologies, I've just joined. What option expiration dates do you prefer and why? If you don't mind explaining briefly, please. Josh, hold that thought for 1 second. If you could make off from trading, I don't need the YouTube career. It's not a YouTube career. I'm creating a video archive for my children and grandchildren. And unfortunately, okay, my children, well, they all live in the same area. But eventually, when I'm gone, okay, I have no idea where my great-grandchildren are going to be. So they can access these video files anywhere just by typing into the computer and popping up Papa G. Okay, so I'm not really looking for a YouTube career. This is just a hobby of mine, sharing and documenting what I'm doing for my children and grandchildren. So let's stay on topic here for a second. So Jacob, my mentor once said you can set and forget, but never forget the set, a stop loss. Sorry, you reminded me. Okay, so I don't use stop losses. So anyway, Jacob, I'm going to show you something, okay? And then I'm going to show you two things, and I want you to explain to me which one you think is better, okay? So sit tight. This ought to be fun because I haven't done this in a while. Hanakuna Matata, what's happening? All right, I got to stop these questions over here so I can take a look at those. All right. You got to pay attention to both your TikToks. I just sent you confetti. Yeah, well, Hakuna, I appreciate that. Thank you very much. But since you were here last, we are now up to 7 cameras and I think 10 different channels. So I got a camera here, 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 and here. So unfortunately, I can't pay attention to each and every single one at the exact same time. So right now, we're going to go and take a look at some weekly options, and then we're going to take a look at some monthly options. And then you decide which you think is better, okay? Now, I do have to admit, weekly options do take a little bit more time than monthly options. Because the monthly options, you set it once a month. Well, a weekly options, you got to set it once a week, which is 4 or 5 times a month. Okay, so let's go take a look at some of the rates of return. All right, so Whirlpool, let's take a look at Whirlpool. Okay, Whirlpool, at this moment in time, okay, Jacob, I want you to pay attention to this, okay? High, the low, where was it? Where is it? Look at the motion. Up, down, up. Okay, great. That's what the motion looks like for Whirlpool. Now, Whirlpool is a monthly optionable stock, which means I can do this once a month, all right? So, bear with me if you will. Now, if I'm buying it here at 91.27, I'm looking at the 92s, I believe. Okay, so let's go take a look at the 92s. Okay, 92.50 right here. Now we don't want to do this one here because this one here only has 3 days left to it. If I buy the stock at the last price, 91.27, I can sell the 92.50s and pick up 65 cents. Well, that's not going to work. It's only 3 days away. It's not 1%. So it's going to be a no. So let's look at the next option. The next option is right here, July 18th. So here's the thing about July 18th. Okay? July 18th is 31 days away. So what is 31 days? By the weeks. There's 7 days in a week. So 4 weeks is 28 days. You got to go 5 weeks. That's 35 days. Okay? So you can't do a monthly unless you go 5 weeks out. So 5 weeks out, right? If I'm looking for 1% every single week, well, if I'm going 5 weeks out, I want 5%. Okay, so let's see what it comes up to. So right now, 91.27, the 92.50 is going for $3.30. Well, I don't need a calculator to tell me that's just a tiny bit over 3%. Jacob, you see that? If I buy it at the last traded price, 91.27, I sell the strike price, 92.50, because that's the closest one, it's going to pay me $3.30, which is just a tiny bit over 3%. Okay? 3% for 6 weeks. Or is that 7? No, 7 weeks. Okay? Because 31 days. Okay? Wait a minute, no, 5 weeks. 31 days. Okay? 7, 14, 21, 28, 35. 5 weeks. All right, sorry, 5 weeks. So I'm getting 3% for 5 weeks. Why would I want to do that? Think about it. Why would I want to invest? But that's not the worst part, because we're going to get to the worst part. Hold on a second. So if I do a monthly on this, okay, at the current price, I can get a little over 3%. So let's see what it looks like. So let's change it to here. Covered stock. The 92.50, there it is right there. Let's get rid of this. Okay, just one contract. Okay, so we'll make it even, one contract. Okay, at the market, there we go. Okay, here's the order right here. Okay, buy one covered call, Whirlpool 100. Okay, 18 July 25. Well, that's the next option available on a monthly. Okay, the 92.50 call option against the Whirlpool stock at the market to open to open. Now, this is a monthly option. Great. Well, let's see what the rate of return is. $468, and it's cost me $8,700. Okay, so let's find out what that is. For that, we need the calculator. Here we go. Bring the calculator on over here. Come on, right there. Here we go. Okay, clear that out. Now, we're going to take the profit, 468. Oops, sorry. Divided by the cost of the trade, including commissions and fees, 87.82. Hakuna, thank you for that. That's awesome, dude. Okay, divided by 87.82. 87.82. Grand total of 5.3%. Okay, great. I'm getting 1% a week on that monthly. Now comes the tough part. Are you ready? Would you prefer 1.5%? Okay. Eric, I'm going to read that in a second. Hold up. All right, right there. All right, so this is again 5.3% for 1 month. Okay, fine. It's getting 1% a week. Great. Now, let's find out the fun part. Okay, let's go all the way out there. All righty. Now, this is a year. Okay, from here to here is 1 whole year. All right, that's a 1-year chart. Now, we're looking for a 30-day window. So let's take a look at the 30-day window. Right here. Today's the 17th, right there. All righty, are you ready? Who is this? Jacob. Jacob, are you ready? All right, so this is 30 days. Okay, it started at 82, dropped down to 76, back up to 80, back to 76, and now it's shot up to 94. Great. Now, tell me, where's it going to be in 5 weeks? Okay, that's 1, 2, 3, 4. That's 4 weeks. That's 1 month, 4 weeks. Well, it's a monthly option. So tell me where you think it's going to be in 5 weeks. That's one of the reasons I don't like monthly options. Now, 5 days from here to here, I wouldn't do this one, number one, first of all, because it's at the high. I don't buy at the high. But if I was going to, where is it going to be in 5 days is a heck of a lot easier trying to figure out where it's going to be in 5 weeks. So I don't do monthlies. It's hard to pick. And in getting 5%, I usually never get 5% on a monthly. So let's take a look at a weekly. All right. Now we did this one this morning, or yesterday. So let's take a look at it. KR is Kroger. All right. Here's the high, here's the low, here's where it was, here's where it is. Look at the motion. Up, down, up. Great. It's at 65.95. That's the current price. And this is a weekly. So let's see what it looks like as a weekly as opposed to the monthly. Are you ready? Now, I hate when I do that. Let's try it one more time. All right, here's your 30 days. It's up here. She drops and shoots up. What do you think? 30-day high, 30-day bottom. Now it's going back up. Great. Let's buy at the 66. It's at 65.95. So let's do the 66 on the weekly option. Okay, so let's see what it looks like. Okay, the 66. Oh, they don't have a 65. They got a 65. Okay, 65. There we go. Okay, just one contract. Okay, at the market. And here we go. Are you ready? Here we go. Buy one covered call of Kroger. 100, that's the weeklies. I don't want the 18th of July of Kroger. I don't want the 18. I want this one right here. '27th of June. That's next Friday. All right. And they do have a 66. Great. Market, blah, 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 blah. Okay, here it goes. That's why I tell people to read it out loud to make sure it sounds right. Because I was reading it and it didn't sound right. All right, so hold up. Buy one covered call Kroger 100. That's the weeklies. 27 June 25. That's next Friday. Not this Friday, but next Friday. And the reason why we're going next Friday, because as of this moment in time, we got 3 days left. Now, 5 days on a weekly option, you get 100% of the option value. You get of the time value. Well, Monday and Tuesday are already gone. So we just lost 40% of our possible cash flow. So what's left doesn't really make sense. So let's go to next week. It's still a week out. Anyway. So 27 June 25, that's next Friday, the $66 strike price at the market to open. Okay, fine. Here's the profit, $195. What does it cost to be $6,400? Let's see the math. Calculator. Clear. Now remember, the one we looked at for the monthly was 5.3. So we're going to take the profit, 195. We're going to divide it by what the cost of the trade was, plus commissions and fees, 64.05, 64.05. Comes up with a grand total of, can that be right? 3%? So look at it this way. I could hold on to it for 5 weeks, a monthly, and get 5%. That's 1% a week. Okay, fine. Well, I could do weekly. This is giving me 3%. So let me think, if I get 3% this week, what's the possibility you get me 3% next week? Could be. So, and wait a second, here comes the best part. Okay, 3% for 1 week. Great. Well, you multiply that by 5, and that's 15%. So 5% doing a monthly or 3% a week, getting 3%. Well, 5 weeks, that's 15%. So 5%. 15%? I don't know. I think do the weeklies. But hold on. It gets a little better. Watch this. Let's get out of there. Get out of there. Go back to here. Go back to here. Now, here's where the current stock price is. Right there. Okay? 30-day high, 30-day bottom. What usually happens on a 30-day bottom after profit taking? Well, usually the stocks goes up. So let me think. Where do I think it's going to be in 5 days? There's a huge difference between trying to figure out what it's going to be in 5 days. Oh, where's it going to be in 35 days? Because I can pick this a lot easier because it looks like, hypothetically, it should be going up very slightly, 67 or 67.5 in the next 5 days. Hypothetically. Okay, well, it's a lot easier than trying to figure out where it's going to be in 35 days. That's why I don't like monthly options. They're way too far out, and most of them do not give 1% a week. Okay? So for the fun of it, just for the fun of it, let's pull up O Realty. That's a monthly. Okay? Now look where O Realty is. O Realty is at 57.53. Well, look at the movement. Up, down, up, down, up, down. Great. Where is it going to be in 35 days? Who knows? Because it looks like it's coming to the downside. Okay, great. So how far down is it going to go before she turns around and goes back up? And is it going to do that in the next 35 days? Okay, so let's see what the option value is on O Realty for 35 days from now. See, right there. It's currently at 57.53. So the 57.50s are going for, is that right, $1.50? I mean, $1.05? So this one is paying a monthly option, and it's $1.05 for 5 weeks. So what is that? That's about 2%, roughly about 2% for 5 weeks. I don't do monthly options because the numbers just don't work for me. Okay, Jacob? I hope you understand that. Monthly options just don't work for me. I want a safe, consistent, predictable 1% per week. All right? I don't do monthlies. The numbers for me just don't work out. You need to get that multi-stream app so you get all the comments on one screen, StreamYard. All right, see, I already have OBS Broadcaster, which allows me to stream a bunch of different places. I don't know anything about StreamYard, which means I would have to learn a whole new software and then cancel one subscription, create another subscription on a platform I know absolutely nothing about. Now, OBS, I've been using it for a while, so I kind of get a good idea how it works. Okay, we the people, just do me a huge favor, okay? If you look at any single of one of my videos, it always starts out the exact same. Good afternoon, everyone. My name is James. This is Dividend Stock Talk. My name is James. This is Dividend Stock Talk. I don't know where you get the name David from, but okay, is what it is. Anshi, good evening. I don't understand that language, but all right. All right. Okay, Josh, how you doing? No stop loss? Well, no, I don't use a stop loss. See, the reason why I don't use a stop loss is because rule number 1, never buy something you don't want to own. So why would you have a stop loss if you buy something you want to take to the grave with you? Buy it as if you're going to hold it for the rest of your life. You won't need a stop loss because stocks go up and then they go down. And guess what happens after that? They go back up again. And then magically, for some strange reason, they go back down. They go up, they go down, they go up, they go down. That's all they do. That's it, and that's all. Okay? If you expect a stock to come to your house, take the dog for a walk, maybe dump the trash, rake the yard, trim the hedges, ain't going to happen. Stocks go up, stocks go down. They do nothing else. That's it, that's all. Okay? All right, so Russian Alex Androvich, Kagdala. Hello, James. Thanks for the teaching. You all-time open covered calls at the money and how you rolling positions. What percent? Always 1%. Jacob, is there a chance it could go down though you lose money instead of gaining? Well, Jacob, here's the thing. And this is a huge misconception everyone has. You think if I bought the stock at 57.53, okay? If I bought it at 57.53 and the stock dropped to $25, did I lose money? No, I did not lose money. The value of the stock went down, but I do not lose until I agree to take less than what I paid for it. Just because the stock drops doesn't mean I lose money. It only means I lose money when I sell it for less than what I paid for it. So yeah, if I bought it at 57.50 and it dropped down to 25, Well, I'd be selling the 27s, the 28s, the 29s, whichever one makes sense. And as the stock goes up, I'd slowly move my strike price up. Okay? Now, I'm not buying a stock for the sake of buying a stock. I'm buying a stock because the company's consistently profitable. And I am creating what I like to call a cash flow asset. An asset that generates weekly cash flow. So think about it. You can go out and buy a store, buy a hardware store, or you can go out and buy a pharmacy, or you can go out and buy a bakery. And guess what? You're going to have weekly cash flow. Now, the value of your store may go up, may go down. You only lose money when you agree to sell it for less than what you paid for it. Okay? So just because a stock goes down does not mean I'm losing money. It only means I have to look at it from a different direction because there's a whole new set of rules. Okay? A plus B equals C. Well, A plus B equals C unless D, E, and F interject and then kind of like, makes things a little bit more complicated. But I never lose unless I agree to sell it for less than I paid for it. Which, rule number 2, I told you, rule number 2, never sell at a loss. Rule 1, never buy something you don't understand. Rule number 2, never sell for a loss. Never sell for a loss. Rule number 3, make sure the company's consistently profitable. That one boggles my mind why people would buy stuff that's not consistently profitable. I see it every single night. Hey, buddy, can you take a look at this? Yeah, I take a look at it and I say, what the hell are you thinking? Seriously. Why would you invest in a company, rule 3, that's not consistently profitable? Okay, and then rule 4, weekly options only. Monthlies just don't work for me. If it has no options, no thank you. Monthlies, no thank you. Because the numbers just don't work for me. Okay, I'm a lazy trader. I want simple, I want easy. Remember the 5 rules. Simple, safe, predictable, consistent, no way for me to lose. That 5th one is a little tricky because you got to understand what it is you're buying. Well, why would you buy something that has risk of losing? Let me give you an example. Before I was born, back in the early 60s, there's a company making Coca-Cola. Well, guess what? That company is still making Coca-Cola. As a matter of fact, they've been making Coca-Cola since the late 1800s. And they're still doing it today. Pepsi, over 100 years old. Bank of America, over 100 years old. Wells Fargo, over 100 years old. Procter & Gamble, over 100 years old. Heinz Ketchup, over 100 years old. There's a whole bunch of companies that are over 100 years old and still consistently increasing their dividends. So just to set some of you straight, I'm not looking for capital appreciation. Now, do you know what that is? Capital appreciation is where you buy a stock here, buy it low, and then you hold it while it goes up, and you hold it, and you hold it, and you hold it, and you hold it. Because capital appreciation companies or growth stocks, they're also called growth stocks, they take all the profits and put it back into the company so the company will grow faster. Well, that's great for some of you. See, I'm retired. My income has to come from somewhere. And I'm too young to get Social Security. And I took a look at what Social Security is going to look like for me. And I just said, oh, hell no. So my money has to come from somewhere. So I could go back to work if I wanted to. But I've been working since 1973. I figured I'm doing society a favor by retiring and let the younger generation pick up the slack. Okay? I retire. Someone else takes my place. Kind of makes sense, right? All right. So that being said, I have to earn X amount every single week in order to live comfortably or go back to work. Now, don't get me wrong. At the age I'm at right now, I can just pick up the phone and have a job like that. Well, I don't want to do that. Because when you get to a certain age, you get certain skills. And they become very valuable to certain companies. So I got skills that are valuable to other companies. But I have no desire to go back to work for other people. Which I probably should. Because you know what? I'm still working, but I'm not getting paid. I'll go to my mom's house and do work down there. Go to my kid's house and do work down there. I'll do work around here, around the yard. It is so much easier just to go to work for someone else and just punch a time clock, come home, relax, pick up the phone and say, hey, I need my lawn mowed, come mow it. So much easier. It is. But you know what? I've been working since 73. I don't want to work anymore. And the dentist was kind of fun. You know, I learned a few things, met a few people. Okay? All right, so Gary, June 19th, market is closed. Okay, not quite sure what that means, but all right. Okay, so check out Trinity Capital. I know what you will say, but just want to hear you say it. I can say it now without looking at it. Hell no. No, I've never heard of Trinity Capital, number one. Number two, if I've never heard of it, you got to give me the ticker symbol so I can look it up. All right? All right. Tiny Coco, how are you today? Fair point. Thank you for the explanation. Thank you, Jacob. Glad you see it that way. Now, it doesn't mean I'm wrong because some people like monthly options because you only got to do it once a month. Okay? So, and if you buy a stock that you're okay with owning long term, do you really care? It goes up and down, up and down, up and down. No, because that's all stocks do. But I find weeklies to be so much easier because 5 days is easier to predict than 35 days. That's just me. Waggy, how you doing today? Tiny Coco, hello again. Love your live streams. Why do you use 1% as your goal, not 0.5% or 0.8 or 0.2? Well, here's the thing, okay? Now, my 9-year-old daughter, when she was 9, okay, it had to be something simple, something safe, something predictable, and something she can get done in less than 5 or 10 minutes. All right, well, the simplest, easiest, safest, predictable strategy is the covered call. All right, now, could I tweak it a little bit to get a little bit more? Well, yes, I could. But then I'd have to spend more time in front of the computer. And then I'm trading my time for money. Well, here's the thing, okay? I'm perfectly happy with 50% or more per year. All right, so 1% a week is an easy goal to attain. Okay, now there are, I think, 3 weeks this week. Now I have 7 accounts, okay? 7 accounts. Out of those 7 accounts, I missed 3 weeks where I didn't hit 1%. So far, I got 3 losses this year in 3 weeks where I didn't hit 1%. Okay, but I have weeks where I have 3, 5, and 7%, which kind of makes up for it. So I'm not really hugely worried about it. But for the most part, 1% is easy to attain. That's why. Because when the easiest trading strategy is just buying the stock. That's the easiest. You pick up the phone and say, hey, let me buy some stock. Simple. However, it's not profitable until the stock moves one way or the other. But a covered call, it's just say, hey, I want to buy a covered call on Realty Income. Or I want to buy a covered call on AT&T. Or I want to buy a covered call on Macy's. It's simple, it's easy, and I know exactly how much I'm going to make before I even do it. So it's either hit my target or don't hit my target. Okay, it's a simple strategy. Remember, it's created for a 9-year-old. It boggles my mind that most adults can't grasp it easily. Okay? All right, so let's keep on moving on. What else do we have here? I thought you were a doctor just by your chart. Support staff, thank you. Rich L. Thoughts on solar? Huge drop. Primary first. No. Okay, dude. Richard, if the company is not 20 years old or more, because I'm looking for 2 decades of consistent profitability. Now, I don't know of any solar company that has 20 years. Maybe Suncor, maybe. Or Nucor, maybe. I don't know. Support staff. You wouldn't be somebody that never returns to $60 a share and a jerk in someone that's not a billionaire, but somebody that uses people. I'm not 100% sure what you mean by that. Okay, you wouldn't be somebody that never returns to $60 a share and a jerk in somebody. I have no idea what that means. You're like kind of dancing all over the place. What trading platform would you recommend? Now, Jacob, I know nothing about you. So, Jacob, I cannot honestly tell you what is the best trading platform for you. I can only tell you what I'm using. I use Thinkorswim. It's owned by Charles Schwab. And I also use Robinhood because I like Robinhood. It's right at my fingertips. I can trade while I'm on the bus. I can trade on the plane. I can trade on a train. I can trade with two birds in a tree. I can trade with my green eggs and ham because I like that, Sam I am. Okay? So I use Robinhood and Thinkorswim. Charles Schwab. Saul Goodman. Better Call Saul. Trin. Oh, Trin. Gary, I've never heard of it, but let's take a look. Because, you know, I respect you as a person. Trin. But, no. Sorry, Gary, I don't do monthlies. The numbers just don't work. Not for me, anyway. So, no. Sorry. La 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 la. Jimmy Latchman. I really wish I could invest, but I'm completely broke and almost paycheck to paycheck. I just feel that any little amount that I would gain, I would withdraw because I have in my head that I need it. Okay. So, Jimmy, I'm going to tell you something. And I don't know anything about you, but just a few cues here and there. Number one, if you're married or have a girlfriend, have her do it. Women make better traders. You hear this? I'm a guy saying women make better traders than guys do. It is what it is. Because it's in their nature to ask questions. It's in their nature to say, okay, that makes sense, let's do it. But guys, okay, we don't want to admit when we're wrong. If we do something stupid and lose money, well, we're just going to brush it under the rug, pretend it doesn't exist, and then do something stupid again. Sorry, I've been trading for a very long time. Women are methodical. There's a checklist. A plus B equals C. Guys just want to go from A to D. They want to miss everything in between. So if you have a girlfriend or a wife, have her do the trading for you. Now, I'm going to show you something. Okay, Jimmy? I'm going to need my glasses for this one. Now, you may think you don't have enough money. Now, this is not going to be easy for you, but I'm going to show you how you could do it. You ready? So let's take this over here. All right, let's click right here because we're going to open another window. And we're going to go to my website, which is The10MinuteTrader. If you want to jot it down, do a little bit of research on it, you'll see that I've had this website for over, I think, 15 to 20 years. All right, so I'm going to come up here to the little hamburger with cheese. Okay. So I want to look at this right here, Jimmy. This is called a weekly compound interest calculator. Okay, so it didn't exist until I created it. Now, I'm not tooting my own horn, listen closely. There are a lot of compound interest calculators. There are. However, I haven't seen one yet that would allow me to calculate, well, if I put in $5 a week, if I put in $2 a week, if I put in $10 a month, if I put in $5. So the consistency of investing, all right? I haven't seen a compound interest calculator that compounds on a weekly basis and allows me to add money. So I actually had to create one, all right? So here it is. Now let me give you, Jimmy, something very simple. So let's say, hypothetically, Jim, you start out with, let's say $100. Okay, first thing I want to do, initial deposit, $100. Now, just for the fun of it, Jim, we're going to put $5 a week. You think you can quit the coffee, get away from Starbucks, stop going to fast food restaurants, okay? Maybe shop at the Goodwill or yard sales, okay? You may think it's degrading. You may think it's beneath you. But if it gets you from where you are to where you want to be. So let's just say $5 a week. Okay, Jim? Start out with $100, $5 a week. Now, the main thing is consistency. Okay? Most people aren't going to do it because it's too much work. But $5 a week, starting out with $100. Now, I have no idea how old you are, so let's just say 10 years. Okay? 10 years? That's safe? Okay. So, now, I'm showing you the strategy. It gets 1% a week. It's a simple strategy. Okay, 1%. Starting out with $100. $5 a week. Okay, let's get this out of there. $5 a week. Okay, hopefully you can afford $5 a week. Hopefully. Now, deposit frequency, weekly. You can do weekly, you can do monthly, you can do bi-weekly, whatever you want. Okay, under that, time frame. Well, do we want to do yearly or monthly? Well, we're going to do yearly because we're going to do 10 years. All right, ready, Jim? 10 years. You ready? Here we go. Okay, 10 years. Now, let's go through the details one more time. Starting out with $100, $5 a week for 10 years at 1% per week. You ready, Jim? Hold on. Compute savings. All right. Do you see what it says? $105,490. That's $5 a week for 10 years. $105,000. Now, the trading strategy I'm showing you, 1% a week, hypothetically, if you took that $105,000 and you got 1% a week, that's $1,000 a week or $52,000 a year. And what did it start out with? $100 plus $5 a week for 10 years. Okay, well, think of it this way. How old are you going to be in 10 years? Whether you start something, it doesn't have to be this. It could be something else. But oh, that's a good one. A penny compound. Let's do that one. Just for the fun of it. 0.01. Okay. And let's put in 1 penny a week. Why not? Let's make it really crazy. 0.01. Okay. At 1%, weekly, blah, 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 for 10 years, blah, blah, blah. Oh, it's only $177. That sucks. But think of it, Jim. Okay, you start with $100, $5 a week over the next 10 years, which means you got to look at your account every day. No, I don't mean every day. I mean every day. You check your email every day, right? You check your phone messages every day. Well, why not go in and take a look at what your money's doing every day? You don't have to do it on Saturdays and Sundays because the market's closed. But think about it. The more effort you put in, the consistency and the time is what you're looking at. So you may be broke, you may not have it, but finding $5 a week as an adult, you should be able to do that. Doesn't mean you're going to, but you should be able to. Let's go back and take a look at some things. Jonas, we looked at CACC. Okay. So we already said no to that one. All right. Austin's in the house. Whirlpool, we'll look at that one. Enzo wants to take a look at STZ. All right, let's get out of this. But anyway, Jimmy, go check it out. Play with it. Start with something. If you don't think you can do it, give it to your daughter. Give it to your mother. Give it to your sister. Let someone do it for you. But just start. Anyway, let's get out of there. We don't need to see that anymore. It's fun to play with. It is. I want to create another calculator because as an adult, we all know what our monthly bills are, a rough idea. Okay, the mortgage, insurance, electric, water, heat, groceries, car payments, credit card payments. We all have a rough idea what it is. Okay, so say you need $5,000 a month to live comfortably, whatever it is. $5,000 a month. Great. I want to create a calculator. Is it $5,000 a month or what do I have right now? Okay, well, if I commit to $20 a week, how quick can I get to that goal? That's the new calculator I want to create. Okay, but finding the see, I came up with the mathematical calculations to do the calculator, but the coding, that's not my thing. All right, let's keep on going. How often do companies that have monthly options change to weeklies? KG, I have no idea how that happens. I think we're already seeing that question. All right, Tina Coco. The main thing I'm concerned is if the stock's movement could suddenly spike up or down contrary to your expectations. Well, Tiny Coco, that's exactly what stocks do. They go up and they go down, and then they go up and then they go down. So the idea is to keep your eye on it. And if you're keeping your eye on it, you have a good idea of where it's moving. And can it spike up overnight? Yes, it can. Can it drop overnight? Yes, it can. The idea is to have a plan in place. Okay? Does it work 100% of the time? No, nothing works. Well, kind of, but not really. Okay? The sun comes up every day, the sun goes down every day. At some point in time, who knows when that's going to be, it's going to stop going up and it's going to stop going down. At some point in time. But it's kind of like clockwork. It does it every day. Every day. So here, I'm looking at stocks that I like, that I'm okay with owning, that have consistently and will consistently increase their profit sharing with their investors. And that's us. We are the investors. So depending on where you are, depending on what it is you're looking for, you need to ask yourself, do I want cash flow or do I want capital appreciation? Because it's two totally different mindsets. I'm looking for cash flow. And if you're looking for capital growth, you're in the wrong place. I'm not trying to chase you off. I'm just trying to be honest with you. If you're looking for something to get out of this, or what stock to buy because it's going to shoot to the moon, you're in the wrong place. I don't do that. I have no concern for that, and I have no desire for that. The reason being, I'm 61. I honestly don't care if a stock's going to shoot to the moon in the next 20 or 30 years. Okay? I don't have any bills that they say, you know what? I see your money into this stock. We won't bill you until you sell your stock. Doesn't work that way. Okay? Credit card companies want to get paid every month. Okay? Mortgage companies want to get paid every month. Okay? My bills come due every month. I cannot and I will not put money aside, wait and watch it grow. Sorry. Cash flow. And the funny thing is, I found a strategy that gives me cash flow. So why would I change? See, the interesting thing about the younger generation, and there's nothing wrong with it, okay, you see something and you want to make it better. Okay, well, my generation is, we see something working and we say, leave it alone. It's working fine, you know? If it ain't broke, don't fix it. If it's working fine, leave it alone. So I have no desire to look at any new shiny objects, any new trading strategy. Okay, I have no desire. Yet people ask me all the time. Well, I still say, yeah, you're wasting your breath because I don't even want to look. I have other things to do with my time than to look at something to distract me from my goal. Well, my goal is very comfortable for me. 1% a week is about 50% per year. And I'm okay with that. All right? So that's what this strategy is. And it's a very small niche. Okay? There are so many other things in life. Well, money is just one of them. So get it under control and then move on to the next segment of your life. Okay? Whether it's religion, whether it's politics, whether it's community service, whether it's education, whether it's family, whatever it is, money should be a tiny portion of your concentration. Once you get it done and over with, great. Now you don't need to do anything else. Tamiko, I'm confused. Alrighty, most people just call me James, but I'll call you confused. Are you selling calls or selling puts on dividend stocks? I'm selling calls. I'm buying the stock. I'm selling someone the right to buy it from me. Simple, right? All right. Good evening, sir. Good evening, good evening. Maybe that's your better side. Eric, I have no idea what that means. Do you have a running list of tickers you follow? The full box, absolutely, full box. I hope you have a pencil and paper. If not, reach deep into that pocket of yours and pull up your lipstick. Just giving you a hard time, brother. All right, you ready? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and for the fun of it, let's throw in Warren Buffett. Those 5 lists right there will give you over 300 companies that are consistently profitable. And yes, I look at them all because they all fit what I'm looking for. Now, I only have 2 criteria. Now, that may sound strange, but I've been doing this long enough, I can break it down to 2. 1, consistency of profitability. Why would you put your money into a company that's not consistently profitable? That boggles my mind. Number 2, weekly options only. I cannot get weekly cash flow unless I have something to sell on a weekly basis. I know what some of you are thinking. Yeah, you can sit in front of your computer and trade all day. Yeah, no thank you. Okay? All right, the trading strategy is called the 10-minute trader for a reason. 10 minutes, that's it. 10 minutes a day, 1% a week. Awesome. Great. Well, think about it. Okay? If I have 100 grand, 10% a day, 1 week, that's about 50 minutes. So let's get an hour. Okay? Because you got to turn the computer on, got to turn the computer off, log in, all kind of crap. So let's say an hour a week. An hour a week to make 1%. Now, if my account is 100 grand, 1 hour of my time is going to gain me $1,000. If I have 500,000, 1 hour of my time is going to gain me $5,000. Well, isn't that peachy? But think about it. It works if you work it. That sounds pretty stupid. It does. But it was created for a 9-year-old. So let's try not to, make things more complicated. All right. Next. Hey, sir, there's no sound here, though. We can't hear you. Why can't you hear me? The volume's all the way up. The volume is up. Okay, so Florida Sun Mom. Oh, Florida Sun Mom. Hello. Is he selling covered calls? Lucian, yes, I am. Mr. Brown. Oh, the wonderful things Mr. Brown can do. He can go like a cow. He can moo, moo, moo. Mr. Brown can do it. How about you? Sorry, Mr. Brown. That was one of those little books I used to read to my kids. All right. Would you prefer 1.5% premium with a 150 strike, or 1% with a 150 strike, giving me 150 more stock value? Eric, great question. I'm going to tell you what I tell everybody. Okay? Always, always, always about the numbers. What am I buying it for? What am I selling it for? Where's the risk? Am I getting my 1%? Okay? These things do make the decisions for us. Do you recommend FinViz Elite? I'm contemplating on signing up. Oh, Bob, I can't tell you what to do or what not to do because I know absolutely nothing about you. Okay? So if I knew what your goals were, if I knew what your risk factors are, if I knew how much you have to start out with, what are your retirement goals? If I knew some of these questions, well, then maybe I can give you an answer. But I know absolutely nothing about you. So I'm not going to tell you anything because it would be a disservice to you. All right? All right. Let's keep on going. Boss man, what's happening? Uh-oh, uh-oh. Uh-oh, what did I do? What did I do? All right. Okay, there we go. Here we are. Thoughts on CRWV. Brandon, what the heck is that? CRWV. Now, Brandon, anytime I say that, it's usually not a good sign. It's usually, okay. Core weed. Yeah, I saw something on this in the news this afternoon. But take a look right here, Brandon. Okay? It's at the high of the year. Now ask yourself, when is the last time anyone has said, hey, Brandon, check this out. It's at the high of the year. Let's buy it and wait for it to go higher. No, what you hear is buy low, sell high. Never once have I ever heard someone say, hey, let's buy it at the high and wait for it to go higher. Now, if you like CRVWV, whatever it is, WV, great. Keep an eye on it. Because eventually there's going to be what's called profit taking. Because look, it was at $60, now it's at $170. From $60 to $170 in a very short period of time. 1, 2, 3, 4, 5 weeks. So that more than doubled, more than tripled in 5 weeks. So don't you think someone is going to start taking profits? And when they do, it's a domino effect. And it just drops. And at that point, you jump in and ride the next wave. Because they go up, they go down. They go up, they go down. Let's back this up a little bit. Why is that like that? Why am I not seeing this? Here we go. I'll go right there, roll it up. There we go. That's what I wanted to see. Okay, so let's go back it up a little bit. That can't be right. That can't be right. Why is it only going back to March? Yeah, no, this thing's not 20 years old. There's no, sorry, CoreWeave. So when you need to sell at a loss, do you sell short? No, Jimmy, I don't sell at a loss. Okay, I've had 3 losses so far this year. That's it, 3. We are in week number 23. No, week number 24. This is week number 24 for the year. Okay, I have 7 different accounts. I have 3 losses in 7 different accounts from the beginning of the year to today. All right? Tamiko, you were born in 73. That's when I got my first job, in 73. I can't. And I'm 57. Oh, wait a minute. Live restricted for some audiences. What? My live does not mention that content. Submit. There we go. All right. Any interest in trades on Procter & Gamble? Ooh, I like Procter & Gamble. James A.U., passive income. Cool beans. All right. Now, so Jimmy Moe, I have no idea what you mean that you can't. You're at 57. I have no idea what that means. If a 9-year-old can learn it, Jimmy, I'm pretty sure a 57-year-old should have no problem. Okay, so Mick Busman wants to take a look at Procter & Gamble. Yeah, Richard said 20 years old, never mind that. The main thing I'm concerned is a stock movement could suddenly, okay, we got that one. 20 years? Oh, yeah, well, never mind. Well, I'm terribly sorry, Mr. Richard, but 20 years is coming whether you like it or not. So you either do something or you don't do something. It's basically that simple. Because when it comes to retirement and you go to work one day and your boss says, no, brother, you're too old. Go home, do some fishing. Okay, you have 3 opportunities. 1, you're going to age out, which means you're too old to work. Number 2, you're going to toe tag out, which means you're going to die at work. Or number 3, you're going to walk out and say, hey, you can take this job and you know what? I have plenty. I don't need you anymore. There's only 3 opportunities. But when you're retired, your money has to come from somewhere. So you got 2 choices, and only 2. Do it yourself or give it to someone else to do it for you. Okay? So whether you like it or not, 20 years is coming. How can you have more than $1 in change but can't change $1? Thank you. I'm not really interested. Would 40 grand be enough to start? Now, Shark, I always suggest people do not put real money in until you play Monopoly for a bit. I'm saying Monopoly in the stock market, paper trading. Okay, so Monopoly is a game where you buy real estate and you rent it out and you go past go, collect $200. Well, this is kind of the same thing. You're buying stocks and you're selling covered calls against it to get a cash flow on a weekly basis. So practice it with a paper trading account. It's free. All you're doing is wasting your time. But you're not really wasting your time because you're learning something that you can take with you. What entry do you look for with Kroger? Okay, see, Dressig, okay? I don't look for an entry. I buy at the open of the day. I honestly don't care what it is. Because see, anytime I do a trade, I do what's called a covered call at the beginning of the day. So whatever it opens at, I buy it at the opening and then I sell a covered call at the exact same moment. So I already know what my profit's going to be before I even do anything. Well, that's one of the beauties of a covered call. You know what your profit is before you do anything. Now, unlike buying a stock, where you buy it and you have to wait for it to move. No, a covered call, you get your profit right away. Is Dell something you do a call on? Absolutely, Shell. Let's take a look at Dell. I like that one, Shell. Let's take a look at Dell. How can you have more than, okay. Let's take a look at Dell. Dell. Now, Dell is a good company. I actually own some Dell. All right, back here. All right, ooh, nice one, Shell. Take a look at that. The high, the low, where was it? Where is it? Look at the motion. Down, up, down, up. Look what's going here. You can't really see it, but I'm going to zoom in and we're going to take a better look at it. Now, for those of you that are new here, never been here before, this screen is live on YouTube. So you can go over to YouTube under the10minutetrader.com, all one word, the10minutetrader.com. Okay, it's a 10, not a TEN. Okay, the10minutetrader.com on YouTube. And you can look at the live, because right now this is live on YouTube. Okay, so after we're done, if you had any questions, you can go back and look at it again. All right, so let's take a look at Dell. Okay, 160 drops down to 65. Do you see what that is? 160 is the high, and just below like 65. Okay, 160 to 65. That is more than a 50% drop. So for some of you out there saying, well, what if the stock drops 10 or 15%? Well, what if it drops 50%? Are you going to panic and sell and run away? No. I buy stocks for the cash flow that it gives me on a weekly basis. Okay, so let's say hypothetically you want to buy a laundromat. It gives you a cash flow on a weekly basis, right? How much should you pay for that laundromat? What is the profit on a weekly basis? Think of it that way. Well, I'm going to put, maybe 50,000 into Dell. Maybe that will get me, I don't even know how many stocks that will get me. At $100 a share, 500 shares maybe? Maybe? Okay, well, let's actually do one on Dell. We're going to do one on Dell and you'll see how it works. And then ask yourself, does it make sense? Okay, so let's take a look a little closer. Before we do, let's check the numbers, make sure the numbers work. The current price, $115.93. Now we all can count the closest strike price, 113, 114, 115, 116, 117, 118, 119, so on and so forth. The closest strike price to the current price, 115.93. That's the current price. The closest strike price is going to be 116. So what's the 116 selling for? 305. Okay, that's a little bit less than 3%. Well, I love 3% a week. I love 2% a week. I'm okay with 1% a week. Okay? Oh boy, crypto airborne. Crypto airborne, do me a huge favor. Okay? Now, I love these 4 stocks you want to take a look at. All right? But what I want you to do before we jump and take a look at those, okay? Go into whatever financial website you use. Write down a little number, okay? How many times has QQQI increased its dividends? Years, increased. Not increased then decreased, but consistently increased, okay? Then do the same thing for Misty. How many years of increased dividends does that have? JEPQ, same thing. SCHD, same thing. So that's 4 numbers I want you to get me. How many years QQQI? How many years Misty? How many years JEPQ? And how many years SCHD? Okay? So we will take a look at all of them, but you got to find me how many years each one of those has consistently increased their dividends before we look at them. Fair enough? All righty. Okay, so here's Dell. A year ago, Dell, we already did that. Okay? 162. The bottom is 65. Okay, but look at from the 65. From the 65 up to here, nice movement. Look at that. Okay, I want to look at the 30 days. Because 30 days gives me a good idea of where it's going next. What do you think? Here we are right here, 112, shoots up, pulls back, shoots up, pulls back, shoots up, pulls back. Now it's shooting up. How high is it going to go? Don't know. But do you like Dell? That's a very important question. Are you willing to buy Dell and hold it until it hits your target? Well, if I buy it now, me personally, at 115.93, I'm going to sell somebody the rights to buy it from me at 116. That's my target. I will, me personally, refuse to sell it for less than 116. Okay? Now, hypothetically speaking, all right, if I buy it tomorrow and then this Friday somebody buys it from me at 116, well, hey, I made my target and I got to collect a premium. Let's check out the numbers. All right? So let's get rid of this. Let's go to the covered call right there. Let's do the 116 right there. Okay, just one contract so you understand what one is. Okay, so if one is going to be X, well then two is going to be X times 2, 3. So you should know how much money you have available. Now, do you have enough money to do one contract, 5 contracts, 15 contracts? Well, you know what your money is. I have no idea what you got. Let's take a look. Okay, now I want to do it at the market. Now, the reason why I want to do it at the market is because it will fill instantaneously first thing in the morning, and then they will sell the option first thing in the morning. The nice thing about it is the stock and the option are linked together, and I already know what I'm going to make before I even put the trade on. Right here. Okay, I'm going to read it to you. 1 second. I need my tea. I'm not used to talking so much, and it bothers my vocal cords. Oh, so much better. All right, here it is. You ready? Buy one covered call of Dell, 100, that's the weeklies. 27 June 25, that's next Friday. That means the option is going to expire next Friday. The 116 call option against the Dell stock at the market to open to open. Now, the reason why I use a market order is because it tells me what my profit's going to be. And as soon as the market opens, I get that profit. $319.50 per contract. So if I buy 5 contracts, it's 319 times 5. If I buy 10 contracts, it's 319 times 10. Okay, so 319 is the profit. Let's divide it by the investment. Okay. Now I say investment is because you always have that money because you own a portion of that company. And then, hopefully, you will sell it at the 116 and you'll get all your money back. But by putting that 11,281 up for the 100 shares of Dell, okay, that's just going to stay there. And it's going to give me a rate of return every single week. So 1% rate of return every single week is over 50% per year. That's pretty awesome, if you ask me. Go ahead, ask me, I'll tell you. Anyway, okay, calculator. Okay, so 319 and 50 cents is the profit, right here. Maximum profit, 319.50. See, I know what my profit's going to be before I get it. Remember, simple, safe, predictable. I know it's going to be consistent. Now, the reason I say consistent is because it's a weekly optionable stock, which means if I don't hit my 116 this week, well, I'm going to do the exact same thing next week and pick up another return, another weekly return. If it doesn't hit 116 next week, guess what? I'm going to do it again. And then 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 I'm going to, over and over and over, until it hits my 116. Once it hits 116, gravy train is over. How much did I make? Okay? So, that being said, $319.50, and it cost $11,281. Okay, so divided by 11,281, and what do we got? 2.8%. Well, 2.8% is a nice rate of return if you think about it on a weekly basis, because 2.8 is got to be way over. Let me think. I'm going to say 121. So let's find out. Multiply it by 52 because there's 52 weeks in a year. I'm saying 121 and it's 147. Damn it. 147%. Now, are you going to get 2.8% every week? Probably not. Okay, I average 1.4. Okay, but I've been doing this for a while. And it's not that difficult. Okay, so Dell looks swell. Oh, that's terrible. Anyway, Gail, good evening. Gail, did you get a chance to actually be able to look at that spreadsheet? Because I noticed you wanted to take a look at it and I sent it. Al, he doesn't have losses. He never sells any of his stocks. I just hold all mine. Okay, Al, that's you. Now, I admitted I have 3 losses this year. I have 3 losses, and 3 times I didn't hit my 1%. 3 losses, 3 times I missed my 1%. Terribly sorry. Okay. Byte Clip Media. How? Know anything about auction market theory? No. How do you close a position, exit the trade, wait for the expiration, or close before? Thank you. Okay, Russian. Okay, Alexandra. It's always going to be about the numbers. Always. What did I buy it for? What option did I sell against it? Where is it right now? Okay, so my trading group meets every morning, Monday, Tuesday, Wednesday, Thursday, 9 a.m. As soon as the market opens at 9:30, well, we already seen what our account has done. Okay, so from 9 to 9:30, we take a look at our current positions and see if there's anything we need to do. And at 9:30, when the market opens, well, we take a look. What did it open up at? Is there an opportunity? Well, Monday, I do all my buying. Friday, we take a look at 2:30. We jump on live at 2:30. Well, the reason why we jump on at 2:30, because the market closes at 4. So we have an hour and a half to make sure everybody in the group doesn't have anything that's going to lose money. That's ideal. Okay? Now, Friday afternoon, we'll take a look. What did I buy it for? What strike price did I sell? What's it at now? What does that mean? Do I let it expire? Do I let it get called away? Do I roll it into next week? What do I do? Well, we can't answer the question of Friday afternoon on a Tuesday night because we don't know what's happening between now and Friday afternoon. But for the most part, what we're looking to do is simple, safe, predictable, consistent 1%. So on Friday afternoon, we take a look. All right, what do I got to do? Okay? Simple. What do I have to do in order to prevent from losing and to keep the cash flow rolling? Okay, so I have 2 main things that I keep my eye on. 1, consistency of profitability, and 2, preservation of my capital. I don't have the luxury of making a mistake or losing money. If I do, and if I lose enough money, I'm going to have to go back to punching a time clock. Yeah, no thank you. All right, Bobby wants to look at fun. Fun, 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 till the daddy takes the T-bird away. All right, delete that. Let's go back to single. Let's move this back over to here, and let's put in fun. Yay! Fun, fun. All right, what the hell is fun anyway? What the hell is that? Six Flags, hell no. I don't do monthlies. They just don't work for me. June 20th, July 18th, September 19th. Yeah, no, I don't do monthlies. The numbers just don't work. Sorry, Bobby. Sorry, Charlie. Starkists don't want it with good taste. Starkists want tuners that taste good. Who's giving out 1% a week? 52%. Trio C, how are you today? What is your strategy to make 1% a week? Okay, RR bump, hang and chill. You'll see it. Don't know anyone making 52% a year. That's because you don't know anybody in my trading group. Okay? Most of the people in my trading group are doing rather well. There's a couple of people in my trading group that are actually doing better than me. Oh, good for them. Awesome. Okay. Actor, Karate Kid. Yeah, no. Oh, the Thug Jim. Hey, what's up, man? Can I get a shout out? Woohoo! Love the channel. I've learned so much. My name is Gabe. Gabe! What's happening? Okay. Are you from Australia? Bloody hell no there, Lottie. Okay, hear me out. You should shave your head and start growing out your nose here to get so that you can oh, thank you. Intel. Jamar wants to take a look at Intel. INTC. INTC. Bloody jolly good. Here we go. Look at Intel. We got the high here, the low here. Where was it? Where is it? Look at this. Up, down, sideways. We're at 2080. 2080. The closest one to 2080 is going to be 21. What's the 21 selling for? 55. That is more than 2.5%. Think about it. 2.5% a week is over 100% a year. 100% a year. Can you imagine doubling your money every year? That'd be freaking awesome. Well, let's take a look. A year ago, Intel's at 30.92. The high of the year, 37. Look at the low of the year, 17. Do you know what that means? 37 to 17. That is a 50% drop. Okay, some of you people in the audience say, well, what if it drops 10%? Dude, this thing dropped 50%. And I'm still buying Intel. I love Intel. The funny thing is that, ooh, this would have hurt. Look at that thing. From 30 down to 21. It goes from 30 down to 21. That's a 33% drop overnight. I bet you that hurt. Well, I didn't own it then. So I bought it somewhere around here. All right, so let's keep on keeping on. So there's the bottom. Let's see what we got. All right, the last 30 days, right there. So what do you think, the last 30 days? 30 days ago, we're at 2150. We dropped down to 19, shoot on up to 2250, pull back right here. Look at this. The high, pulled back, 2 days to the upside. Friday's the low, Monday higher, Tuesday higher. Guess what? If tomorrow, if this thing opens up higher than 2080, for me, that's an entry. Because you get your 30-day bottom here, 30-day top, pulls back. Here's a new bottom right here. Okay, 2 days to the up, right? 2 days up. Third day is my entry if it opens higher at the beginning of the day, which is 9:30 a.m. Eastern Standard Time. That's when the stock market opens. I have no control over that. But I like Intel. Let's do the numbers. What does a 21 look like? All right, well, let's do it. Covered call. All right, here we go. 21, and here we go. One contract right there at the market. And here's Johnny. Buy one covered call Intel 100. That is the weekly. 27 June 25. That's next Friday. $21 call option against the stock at the market to open. 2 trades, not stuttering. Buying stock, selling the option. You buy stocks, New York. You buy options, Chicago. Hey, profit 77. It's going to cost $2,000. Calculator. 77 profit. Was it costing? $2,000. 2023. 3.8%. 3.8%. It's just shy of 4% for 1 week. But here's the thing. Think about this. Number one, does it make sense? It either does or it doesn't. Number two, do you like Intel? Number three, do you like Intel at this current price? Number four, do you want to buy it, never sell it, collect a weekly cash flow from it every single week until it hits your target? What's my target? 21? It's $20.80 right now. It's at $20.80 right now, and it's offering me 3.8%. You want to see something really cool? Hold that thought. Now, 3.8% is if it's all cash. Because as you get good at this, your broker is going to offer you, say, hey, you're pretty good at this. How about some margin money? And you're going to say, what's margin money? Well, for every dollar you put in, I'll loan you $1. So instead of having $1, you now have $2. But that second dollar you have to pay interest on. What are you going to pay? 8%. I'm paying 8% on my margin money. Okay. If I'm paying 8% on my margin money, I best make more than 8% rate of return, so I'm having a profit. Well, I'm getting 1% a week, so 52 weeks. They say, yeah, I'm making a nice little profit. Thank you kindly. So let's take a look at the calculations if it was margin. Now, if you've never traded before, if you're new, do not use margin until you understand the risks involved, because you're using someone else's money to trade with. And if you're wrong and it goes against you, it hurts a lot. It does. So don't do it until you understand it. But I do understand margin, and I do have margin. So let's see what it would get for me. And then there's a bunch of you out there that do have margin also. So let's take a look at those numbers. Okay, the profit is still the exact same, $77. Okay, that doesn't change. But what does change is this right here. $2,000 if it's all cash. But considering I have a margin account, look how much of my money I'm putting in. $984. That's because half of the money is mine and half the money is borrowed from my broker. Now, to borrow money from my broker, I pay 8% per year. So for $100,000, I'm paying $800 to borrow his money. Okay. All right. So I'm going to divide it by the buying power effect, 984. That's how much margin I'm putting in. Divide 984, grand total of, check this out, 7.8% for 1 week. Now, you a question, how can you get 1% a week? Well, this trade right here, if I did it tomorrow morning, would get me roughly around 7.8% for 1 week. But the big question is, do I like Intel? Am I willing to hold on to it for a long period of time? It's a yes, no question. And as a matter of fact, I'm going to write that one down. 8%, hell yeah. All right, Intel, that doesn't write. INTC. All right, so we're looking at the 21s. The 21s, and it's going for, what was it, 3.4? 3.4% all cash. All right, so I wrote that one down and see how it plays out on the end of next week. So every time we find a really good one, I'll write it down, and then later on in the week, we'll see how it's working out. All right, that being said, I like that one. All right. Okay, Lumina wants to take a look at Macy's. All right, let's take a look at Macy's, see what it looks like. See what it looks like. All right, Macy's, here we go. Macy's, coast to coast. No, wasn't that quick? You might be thinking, that was way too quick. So when you know what to look for, okay, and I told you many times, I'm looking for 5 things. 5, when I look at the chart. Very first thing, I don't even want to look at the numbers. Don't care about the numbers yet. I want to look at the chart, and it takes 3 to 4 seconds. You ready? High, low, where was it? Where is it? What direction is it going? Down, sideways, down, sideways. That's it. That should take you 3 to 4 seconds. That's it. And if it's a yes, great. Now let's look at the numbers. It's currently at 11.60. The 12 is going for 7 cents. Yeah, no thank you. It's not 1%. Because 1% of $11.33 is going to be 11.5 cents. This is only offering, what the hell? Oh, it just changed again. No, it's only offering 7 cents. 7. That's not 1%. No. Sorry. Do you care for yield max? Lauren, how are you today? I hope you're doing well. All right, so Lauren, what I'm going to do, okay, I'm not going to put yield max into the chart. I'm going to go right to Yahoo Finance. Now, Yahoo Finance is the website that I like to use to give me the details of a company that I'm interested in. Now, you should always, Lauren, you're going to have to give me the ticker symbol for the yield max because I don't buy it, and there's a reason why I don't. So if you have the ticker symbol at the top of your head, let me know. That being said, let's get out of there. What's a grifter badge? Fruiter guy, I have no idea. Fruiter guy, I'm a grifter. I want a grifter badge. Good for you. Jimmy Moe, 57. All right, good. Look at J.P. Morgan. Okay, J.P. Morgan. Okay. J.P. Morgan. You ready? See how quick you can see the chart. You ready? Here we go. High, low is look at the motion. Up, down, up. Nope. No to J.P. Morgan. It was quick. Why? Take a look at this right here. 30 days ago, 252. Now, we're at the 272, which is the high. Yeah, no, thank you. I don't do buying at the high. That's the time to sell, not to buy. Okay, so let's keep on going. We can hear you. I can hear you. I can hear you. I bought it at 30. All righty. Dividend King. Okay, thank you for that, Laurie. Okay, Cajun, new IPO. See, the thing is, Cajun, I'm looking for companies that have 2 decades of increased profits. So IPOs aren't going to have 2 decades of profits. Enzo, STZ. Oh, you asked me earlier. I forgot about that. Sorry, STZ. What the heck is that? Constellation. No. Enzo, check this out. What do you think, Enzo? Down. It hasn't found the bottom yet. If you like the stock, Enzo, keep your eye on it. Eventually, it will find a bottom. It will turn around and go back up. They almost always do. Almost always do. Okay, so I don't know anything about this company, so I honestly couldn't tell you. So do you still have those 3 stocks? What part of I have 3 losses? But here's the funny thing is, see, I lost money on Harley Davidson because one of the options I sold, it was a credit spread. And somebody exercised the tail end. I wasn't expecting that because it didn't make financial sense. But someone did it anyway. So I got stuck. And then I had to buy it out. And then I had lost a little bit. Scotty Cook, how you doing? All right. Brandon. Okay, that makes sense. I'm 6 weeks new doing this. Thank you. All right, Brandon, keep showing up. You learn something new every day. All right, I don't understand what a sell at a loss means. What does loss mean in this context? Well, considering I never sell at a loss if I can help it. Now, I do once in a while because I did have to sell Riley at a loss because I got a margin call because of TDS. Now, we all know what TDS is, okay? That's that Trump derangement syndrome. Trump gets up and says, tariffs, and everybody panics and sells all their stock and the stock drops. Why? So I got a margin call, so I had to sell. Let's keep on keeping on. Do you trade every day or just the start of the week? Just the start of the week, mostly. Mario, stop touching your monitor. You mean like this? You want me to stop doing it? Okay, why? I have no idea why. Okay, Bitcoin Playboy, you buy for cash flow, so you only buy dividends. No, I only buy dividend stocks for cash flow. The audio is looping on the other live like you have 2 mics on. Well, here's the thing, okay? If you're listening, because you're on the mobile, because you're talking to me here on the mobile, and you say there's an echo coming from the other YouTube channel. Well, there's a delay. Because see, when you're on a mobile, it goes to someone different than if you're on a laptop. Because the laptop goes somewhere else, because it goes through Restream. So it goes to the satellite, then it goes to Restream, then it goes back to the satellite, then it goes to you. Well, on the phone, it goes to the satellite and then to you. There's a delay. So if you're using both the phone and the computer, you're going to get a delay. So you got to turn one of them off. You can't have both of them going because they're not synced. Okay, I don't know if that makes sense. It's two separate channels. It's not the same channel. It's two separate channels. All right, let's keep on going. BARC, JMF, I have no... Julie, how are you? Julie C, I haven't seen you in a while. How are you, young lady? Okay, so BARC, what the heck is that? BARC. All right, now, unfortunately, JMF, if I put in BARC and this pops up, well, that usually means it's not a U.S. stock. So that's going to be a no. Sorry. All right. Now, Bobby, we looked at the ticker fund, and it's just a no. Rambo and Brambles. Dude, it's all back to front. I have no idea what that means, back to front. QQQI does not consistently increase dividends. I know that. I was asking him to check it out because I already knew that. Can you turn it around? Rambles? No. Okay? Terribly sorry. I do not know how to invert the YouTube camera. Now, TikTok, you're allowed to invert the camera, but YouTube doesn't have that opportunity. Terribly sorry. What do I think about Bitcoin? I love the idea of Bitcoin. If a quit... yeah, thank you, Patriot. Do you really have to be so childish? Now, Jay Port, what do I think about Bitcoin? Interesting. Think of it this way, okay? Ford Motor Car makes cars. They produce a product. General Electric, they produce products, okay? Bitcoin produces nothing. There's no product to back the coin whatsoever. There's no assets to back it. There's no, because it doesn't produce anything. It has no value other than the agreed value amongst other people. So you and I are agreeing what we think Bitcoin is worth. That's where it gets its value from. There's nothing backing it. Now, I did read today that the U.S. Congress passed the stablecoin. Well, we all knew it was coming. We just didn't know when. Well, apparently they passed a bill. So when is the U.S. cryptocurrency coming available? The stablecoin. It's a great idea. Think about it. It's a great idea. Get the greedy little fingers of the bankers out of our pockets. Here's something for you. Are you ready? Here's my idea of crypto, cash, credit, all that kind of crap. Cash. If I take a $50 bill and go to the market, the farm stand market, the local farmer, and I give him $50, he gives me $50 in product, he gets $50. Okay, great. He can take that $50 and go pay his mechanic. Well, his mechanic gets $50. He can now go and give his employees $50. Okay? Then his employees can go and he can buy this, he can do that, he can do that with the $50. That $50 never changes its value. But here's the thing. Cryptocurrency and credit cards. Okay? If I took my credit card and went to the exact same farm stand and bought $50 worth of groceries, I get $50 in products. What does the farmer get? He doesn't get $50. He gets what? $49.70, $49.50. Okay? And now he's got to take money out of his pocket to pay $50 to someone else. And that person doesn't get $50. They get $49.50. Well, now they got to reach in their pocket to pay. So as it goes down the line, cash is king. It stays the same value from one person to the next, to the next, to the next. But credit, I get my $50 worth, but the person I'm buying it from doesn't get $50. They have to reach in their pocket for money. So they're actually losing money going by credit. And then he pays someone else. And that person doesn't get the 50. So as it goes down the line, that $50, it's lower and lower and lower and lower. So eventually it gets all eaten up by fees. Now they're probably going to do the same thing with stablecoin. Because once you give the bankers or the government a little bit of a taste, they're going to take a bigger bite and a bigger bite and a bigger bite. I like cash. Okay, now remember, you may or may not remember this, but I do because I lived through it. When Europe decided to go to the euro and get rid of all those different currencies, England said, hell no, we like our currency. And they refused. So they accept they accept the euro, but they also have their own currency. I would love that for the US. I'd like to use my cash because I don't trust the government whatsoever. Because think about it. Electronic money. They can go in with a press of a button, they can turn off all your money. You have nothing. But if you have cash in your pocket, that still works. And there's no way to turn off cash because it's out of their greedy little fingers. Anyway, let's stop talking about that and let's move on forward. It's 11 o'clock. Holy cow. All right, so JFM. Bark, really? What the hell is it? All righty, Jessica, how are you doing? Kevo, is getting called away a frequent occurrence? Yeah, it is. Can you look into Kraft? Kraft, you mean KHC? Kraft Heinz? KHC. Yeah, look at it. It's dropping. So what are you waiting for? Okay, yesterday is the bottom of the year so far. Now, for me, I like 2 days to the upside when there's a new bottom. Well, new bottom was yesterday. Today is higher. Okay? So tomorrow, it might be higher, and that would be 2 days to the upside. Now, I like 2 days to the upside and then jump in on the third. I would love to jump in on the third day with Kraft Heinz. Well, Kraft Heinz is at 25.75 at the moment. So the closest one's going to be the 26. And very rarely, now I've been doing this for a long time, very rarely does Kraft Heinz actually give you 1%. So at the current price, 25.78, well, the 26s are going for 30 cents. That's more than 1%. But haven't found the bottom yet. Now yesterday could have been the bottom. Well, it will all depend on tomorrow and the next day and the next day. Okay, the only way you can come up with a bottom is by having something else to compare it to. Let me show you. It's really not that difficult. Okay, now, do we know if this right here is the bottom? It looks like the bottom, but there's nothing on the other side to compare it to. So, although it is the bottom, it's not actually the bottom. Because tomorrow, the next day, could be lower. So what is the next day? Well, let's go. Oh, look at that. The next day is lower. Okay, so that wasn't the bottom. This is the bottom at the moment. Because you always have to have something to compare it to. Okay, so it looks like the bottom. Let's go 1 day forward. 1 day forward. Whoops, wrong way. Even lower. So you have to wait until it finds the bottom, turns around, and goes back up. So keep watching it 1 day at a time. Okay, next day, 1 day up, see? Bottom, 1 day up. Is that the bottom? I don't know, because it's only 1 day to the upside. Well, it could be a fluke. It could be a coincidence. Well, I like 2 days to the upside. There's your two right there. Bottom, 1 day, 2 days. So if the next day, day 3 to the upside, is higher, then yeah, that's where I would jump in. And nope, that ain't it. Well, yeah, it is it, because it is higher. There's a higher bottom and a higher top. So there's day 3 right there. That's where I would jump in. So what happens then? Then you can say, that's the bottom. Because now you have 3 days that are higher than that. You have to have something to compare it to, because you don't know where the bottom is until you have supporting evidence proving that it's the bottom. Right there. Bottom, 3 days up. Well, that's kind of the bottom. You have to figure out what works for you. They change every month. Absolutely. Lockheed Martin. Skit wants to take a look at LMT. Oops, I actually have to put it over here. LMT. What the hell is that? Oh, get that thing out of there. Get that thing out of there. Okay, there we go. All right. Interesting. Let's take a look. Okay. High, low is. Look at the motion. Up, down, sideways, 479. The 480s. 480s go for 910. That's over 2%. If you like Lockheed Martin. Now, I don't do stocks over $250. That's just me, just a personal thing. But for those of you that do like Lockheed Martin, well, let's take a look. A year ago, 459. The high of the year, 619. The bottom of the year, 416. Well, look what happened since then. Okay, here's the bottom. Shoots up. She's just going sideways. Now, I don't know if that's something you like. Well, let's look at the last 30 days. Because the last 30 days usually gives me a good idea of where it's going. 30 days ago, we're at 467. Up, down, up, down, up, down. Yeah, no. It doesn't look that favorable. But I don't know. How much do you like Lockheed Martin? Dude, you're in mirror image. Yeah. Tell me how to fix it. Okay, don't tell me something I already know. Tell me how to fix it. Because see, I know it should be mirrored. I do. Okay, I got 3 YouTube channels. 1, 2, and 3. And all 3 of them are backwards. Because YouTube doesn't give me the opportunity to invert the screen. Okay, TikTok does. But YouTube doesn't. Don't ask me why. I don't know. Oh, Bitcoin Playboy. Why not sell puts for income? Now, see, Playboy, you're under the assumption that this is the only trading strategy I do. It's not. It's the only trading strategy I give away for free. Now, think about it. If I'm giving you a trading strategy for free, because I'm not trying to sell anything. I didn't ask anyone for any money. Okay? It's a simple, safe, predictable strategy. If you do it right, you can get 1% a week. That's 50% per year. And you want me to share more information. Nah, I got to draw the line somewhere, okay? Because I can be here all night talking about all the stuff that I know. And a lot of people get bored and a lot go over a lot of people's heads. So no, I don't do that. All right? This doesn't give me much hope. Sorry, dude. Please read it to me because I can't read it back to front. Okay. Just an update for those in the chat. You need massive margin to make an actual income with this. Well, Bitcoin Playboy, I'm going to disagree with you. Okay? Now, with the name Bitcoin Playboy, I'm going to make the assumption is that you probably have a lifestyle that requires a large amount on a monthly basis. Because anybody to use those particular words to describe yourself, well, let's not just, cast aspersions. Anyway, it is not for you to say how someone should live their life. Think about it. Okay? I'm not going to tell you how to live your life. So why are you telling other people how to live their lives? So let's say, look at it this way. $50,000, 1% a week is $500 a week. Well, that's $2,500 a month. Some people can live comfortably off of $2,500 a month. Okay, I know for a fact my mother gets less than $2,500 a month on Social Security, and she loves her house. She loves her little life. She's got a nice little garden. She's got a nice little shed. She's got a nice house all to herself, and she can afford everything on her, I think it's like $2,300 a month Social Security payment. So 50,000. That's it. 50,000 could give you 500 a week. Well, 500 a week. Well, that's 2,500. Wait a minute. Yeah, 2,500 a month. So why would you say that you can't make a good living on that? Now, you may have, what, $8, $10, $15, $20,000 a month. Well, yeah, you need a bit more. But you don't have the right to tell people how to live their lives. I live very comfortably on what I have. Okay? Other people, everyone's different. Everybody has their own number every month. So you use your life in your comparison. Hey, lemonade, 500 a week is 2,000. No, because the month of November has 5 weeks. There's a bunch of months that have 5 weeks. Okay? If you really want to get technical, you take 500 a week, multiply it by 52, and then divide it by 12. That gives you more accurate. But still, everyone is different. Everyone has a different amount that they need to come up with on a monthly basis. And I use the word need. I probably should capitalize it and underline it, because there's a huge, huge difference between need and want. Because in reality, the only thing you need is food, shelter, and clothing. Okay? Everything else is a luxury. Call it whatever you like, it is. It is a luxury, not a necessity. Okay, so figure out what you need, work the equation backwards. If you need $10,000 a month, well, you're going to need $240,000, because $240,000 is $2,400 a week. Work it backwards. It's not that difficult. It's just a math problem. What if Dell stock price drops to 105? Would you still use 116 as a strike price? No. It's all about the numbers, David. Okay? So when the stock drops, I drop my strike price, but I don't drop it to a point where it might be at risk. Because if you see these numbers right here, okay? Take my ticker symbol right here. Okay. See these numbers right here? Okay. This is the date, the opening price, the high of the day, the low of the day, the close of the day, and this right there. That is the range of the day. The distance between the bottom candle and the top candle. How much range? How much does a stock normally move on a daily basis? Well, you average it out, do a little bit of math, and that gives you an idea of where it might be. Think about it. It's always a numbers game. Does it make sense? It's a yes, it's a no. What if the stock 20%? Then what strike are you selling at? Okay, just a nobody. All right, so 20% you say. Well, if the stock is at 479, okay, 20% of 479 is $100, roughly. So now it's down to 379. Well, at 379, more than likely I'd be selling the 385s, 387 and a halves. Whatever's close, but not too close, because I still want that cash flow coming in. But if it goes up and down, you look at the range. How much does it normally move on a daily basis? Am I going to be at risk? Remember rule 1, never buy something you don't understand. If you don't understand what is the high of the year, what is the low of the year, what's the difference between the two? How much does it normally move on a yearly basis? You got to take all this into consideration. It's a numbers game, just like Monopoly. You know, you buy 3 green houses, you get 1 red hotel. Or is it 3 red houses, 1 green hotel? I don't know, one of those. Yeah, 3 green houses, 1 red hotel. All right. Are you doing this in a Roth? No, I'm doing it in a corporate account. Honeysuckle. I've tried to learn this for a while. I can't wrap my brain around the concept. Do I do one-on-one? Yes, I do. Honeysuckle, let me see something for a second. Okay, I can't tell if you're a girl or a guy. I can't, that picture. It's so small. Anyway, here's an idea. Are you ready? All right, honeysuckle, you ready? Here we go. Listen closely. Hypothetically speaking, you got a car in your backyard. Push it out to the front, slap a for sale sign on. Let's say you want $5,000 for it. 68 Mustang, hardtop, no interior. It's worth $5,000. Okay? You put a for sale sign on, $5,000. Tom down the street, the guy in the White House with the blue shutters. Yeah, that guy. He comes by and says, "Hey, honeysuckle, I like your car. Let me give you $500. Hold it for me until Friday." Think of it as a non-refundable deposit. He comes back on Friday, he gives you the $5,000, the additional $5,000, not the $500. That's totally separate, non-refundable deposit. If he comes back on Friday, he takes the car at $5,000. Now you walk away with $5,500. Well, let's say hypothetically, he doesn't come back on Friday. You keep that $500, and then on Monday, you sell it to Jerry. He lives 3 streets over, and his car's a piece of crap, and he likes yours. He gives you $500. If he comes back on Friday, he will give you $5,000 for the car. Now you got $500 from Tom, $500 from the other guy, and the $5,000 for the car. Okay? If he doesn't come back, guess what? You keep the $500, and now you sell it to Peter the following Monday. Because from Monday to Friday, you can't do anything because they have the right to buy it between now and Friday. Okay? They either buy it on Friday or they don't. And if they don't buy it on Friday, you sell it to someone else the following Monday. And then you collect another down payment, another premium, another weekly cash flow from the same asset. And you never, ever, ever sell that car for less than $5,000 because every week someone's coming by giving you $500 for the opportunity to buy it on Friday at $5,000. So if you have it at $5,000, never ever sell it less than $5,000, and then you collect $500 every single week until it hits the $5,000. I hope that kind of explains it. Or you can just do the girl math. Do you know what girl math is? I'm sure you know some of your girlfriends have done this. You go to a store, get you a nice set of Jimmy Choos. Okay, what's that? $700-800 for a pair of shoes. You wear it for the weekend. You wrap it back up, dust it off. You bring it back, and get your money back. That's girl math. You got to use it. You got the benefit of using that. And then you brought it back. You got your money back. Same thing. You got something in return. What I'm getting in return is cash flow. The car example, you're getting that $500 over a week. The girl math example, you're getting to wear the Jimmy shoes for the weekend. Then you bring it back. Get your picture taken in it. Hey, don't they look lovely? Yeah, same thing. So hopefully that makes sense. User 446863027326. I'm going to call you Mike. All right, Mike? 8% of $100,000 is $8,000 in interest. Yep. You're absolutely 100% correct. Good. You got your math right. Now, look at it this way. If I borrow $100,000 at 8% a year, I'm paying $8,000 in interest, right? Okay. If I have that $100,000 and I'm making 1% every single week, that's $52,000 I'm bringing in. I take the $8,000, I give it back to them, and I walk away with what? $44,000 on someone else's borrowed money. Well, I got no problem with that. And here's the kicker. Borrowed money is tax-free. But if I'm paying interest on it, that's a tax deduction depending on how I have my account set up. You need to talk to a tax strategist. But think about it. I will borrow as much money as I can, and I'll go as high as 20%. Me, personally. Okay? Lumina wants to take a look at Riley. All right, Riley. I got me a bunch of Riley. Riley. What are we looking at? Uh-oh. Or is it right there? R-I-L-Y. Riley. There we go. 291. Holy cow. Look at the last 30 days for Riley. Okay? 340. Okay, jumped up to 380, dropped down to 270 something. Okay, now we're at 291. Okay, look, down, up, down, up, down. Could this be the motion to the upside right here? Because yesterday is the new 30-day bottom. Today is 1 day to the upside. Not huge, but still up. Okay? Does it sound like something you want to do? Well, let's take a look at Riley. If I buy Riley right now at 291, I can sell the threes and pick up 12 cents. Do you realize that 12 cents on a $3 stock is 4%? You cannot buy Riley on margin. So don't think you get 4% cash. I get 8% margin. Nope, sorry, you can't buy Riley on margin. Okay, Skit, we already looked at Lockheed Martin. Tamiko, is the chart on the screen that you're discussing a weekly chart? No, it's an annual chart. It goes from 365 days ago to today. 266 little incremental movements because there's only 266 trading days in a year. That's the whole year. Each one of these little candles is 1 day. I'm not looking at the 5-minute chart. I'm not looking at the 1 hour chart. I'm not looking at the 30-second chart. Nope. I'm a lazy trader. Seriously. I look at the simplicities of it. What was it yesterday? What was it the day before? What was it the day before? I don't sit in front of my computer trying to make money. I'm 5 or 10 minutes with my own account, in, out, thank you very much. 1% is perfectly fine for me. If it's not enough for you, you do what's right for you. Lemonade. Okay, in the chat, you need, okay, no you don't. That's last Friday according to your screen. No, because that's Tuesday, which is today. Yesterday, that's Monday. The next one is Friday. Okay? So it goes Monday, Tuesday, Wednesday, Thursday, Friday. Monday, Tuesday, well, tomorrow's tomorrow. Do you change your stock price week to week if the stock price drops 20%? Absolutely, David. Okay, I look every single day. Okay? Now, I also brush my teeth every single day. Okay? I feed my fish every single day. I feed my dog every day. I go out and I feed my plants almost every day. Almost every day. If you don't take care of your money, who knows what it's going to do? Okay, it's up to you. It's your choice. Do it yourself. Take responsibility. It's not that difficult. Okay, you open it up. All right, what's Riley at today? Oh, 291. Oh, cool. I got it at 3. Okay, what am I getting for my 3? I'm getting 9 cents. Well, 9 cents is 3% of 3. Well, that works for me. It's not that difficult. It's just one more thing to do in the morning. Okay, fine. Get up 10 minutes earlier. 10 minutes earlier, not enough for a 50% return? Well, if you had 20 grand, maybe it's not. But if you have a couple of 100,000, well then yeah, it is worth getting up a little earlier. But guess what? You ain't going to get to a couple 100,000 until you get past 10,000, 20,000, 30,000. Then the numbers get big. See, the longer you are in the game, every week if you put more and more money away, because you're going to retire whether you want to or not. Because it's coming whether you want it to or not. You honestly think that I wanted to be 61? No, I wanted to say 20s forever. I did, but it doesn't work that way. Okay? You get older. I got older. So what did I do? I got to learn to figure it out myself. Conan, what's happening? All right, let's keep on going. What other questions we got? It's almost 11:30. AMD, advanced micro devices? No. Okay, it's almost 11:30. Okay, I just want to answer the questions and be done for the day. So let's see what kind of questions we got. Kev, AMD, I don't think they have dividends. I don't. Do they? Does AMD have dividends? Let's find out. AMD. All right, we're going to Yahoo Finance. Now, you should, if you're serious about investing, you should have access to a financial website. So, Advanced Micro Devices, AMD, $127 per share. EX dividend date, 1995. This company hasn't paid a dividend since 1995. We can all say it. You ready? 1, 2, 3. Hell no. No. No dividends, no thank you. If the company's not profitable, not sharing their profits, no thanks. What do you think about Riley getting a delinquent notice from the NASDAQ for not filing their quarterly reports? Ooh, I did not know that. Thank you. I might rethink my position in Riley. Anyway, let's keep on going. Thanks, Eric. Mikey G, what's happening, brother? Mikey G, it's 4 minutes until 11:30. 4 minutes until I leave. Oh, no. All right, so anyway, let's go to YouTube and see how many questions we have there. You have to spend $10,000 to make $300. Okay, Playboy, I'm not quite sure why you think that's a bad thing. So let's do some math, just for the fun of it. All right, my calculator. Okay, clear. You said I got to spend $10,000 to make $300. Okay, 300 divide 10,000 gives me a grand total of, oh, hell no, 3%? Sure, why not? Think about it. 3% for 1 week. Why is it you think that's a bad thing? Oh, that's right, because you're into cryptocurrency. You don't understand what I'm doing. And there's nothing wrong with that. You know, it's not for everyone. Okay, so if it doesn't make any sense to you, why are you here? Think about it. Doesn't make any sense. So I'm not, and by the way, I'm not spending $10,000 to make $300. I'm investing $10,000 to make $300 every single week. So at the end of the year, that $300 every single week, well, it's 3% a week. Well, 3% a week for a whole year, that's 150% return. I don't see the problem with that. Okay? Rambles and brambles. Imagine investing in a guy that can't put his camera the right way around. You know what? You know what you can do? Dr. HC. Boring. Cool. You don't need to be here. Pepe gives great returns. No, it don't. He just hasn't got a clue. Absolutely hilarious. Okay, what he doesn't tell you is your call don't fill in a bear market, and you are losing massive money. See, the funny thing is, I've been doing this for over 20 years. I have. You know what? Let's take a look at some of my trades that I've done in the past. Okay, right there. Okay, let's go. Come on. Open sesame. It's not opening up. Damn it. Damn it, damn it, damn it. That's not working either. There we go. That's working. Now try it one more time. Nope. It's not opening. Oh, well. It is what it is. Oh, there it is right there. Okay, let's go back up here. Come on, come on, come on. Now touch me, baby. Why is that doing that? All right. Let's try it one more time. There. It's not working. All right, time to reboot the computer. Anyway, now, if you're curious, Mr. Bitcoin Playboy, you can actually research me. Now, I don't hide under the name Bitcoin Playboy. Okay, my information, is it available now? It just might be. It is, there we go. All right, right there. Okay, weekly trades 2024. That's not what I want to show you. Okay, let's go all the way, oh dang it, all the way down, all the way down, all the way. These are all the trades I made in 2024. Hold tight, don't go anywhere. We're almost there, we're getting closer. Got to go all the way down to the bottom because that's where the information is. Bottom of the page, there it is right there. Okay, my very first time I actually posted a trade online for others to see, August 31st, 2011. Now, I've been trading a lot longer before that, but this is the first time I actually shared my trades. Okay? So the first year, this is what I made, second year, blah, blah, blah. So you can go down a little bit further. Okay, look, here we go. Look at this. Okay, 2013, 30-day chart, 90-day chart, 1-year chart. Same thing. You can read the what do you call it? The little description for each one. Now, you'll see that I have over 1,000 videos on YouTube. So I've been doing this for a while. So I just love it when people, such as yourself, come in and think they know more than they actually know. Okay? There's something that I have that you don't, and that's called wisdom. And you can't buy wisdom with all the money you got. You got to earn it. So I've been here a long time. I think I've earned the wisdom that I have. And I'm sharing it for free, so quit your bitching. Okay? All right, what do we have here? Steven, Kohl's, MPW, Ford, all good for NE under 1,000. Okay. Kivo, what's the one dividend stock you would recommend? Okay, I don't make recommendations. Terribly sorry. Scotty Cook, Root is on the up and up. Do their Bitcoin holdings and mining? So if someone wants to invest in Bitcoin, they can invest in Riot and Mara also. Thank you there, Scotty. So what else we have? Bitcoin Playboy, very low reward, extremely high risk. Like I said, okay, Zach S. Who is he looking at? I have no idea. I meant Riot, not Root. I actually have some Riot, but I understand what you're saying. Okay, so Bitcoin Playboy, you're the exact person this is not for. Okay? Now, for somebody such as myself who's retired and doesn't want high risk, do you do this in a Roth? No, I do this in a corporate account. Because a corporate account, I'm allowed to offset profits by corporate losses. So it's a numbers game. You should talk to a tax strategist if you're concerned about taxes. So, Rambles and Brambles, don't turn on the air con. It will, okay. How many covered calls are you stuck wheeling? I don't wheel. Oh, okay. Bro, what chat is he reading? Okay. You do realize you're not the only one here. I got a chat over there, a chat over there, a chat over there, and a chat over there. Okay? You're not the only one. Honeysuckle, thank you for your car comp. That is helpful. I assume I have to own a certain amount of stock first. Yeah, you have to own 100 shares. 100 shares equals one contract. Home Depot versus Lowe's. Which one is the better for long-term investment? Okay, Enzo, my idea of long-term is 30 days. So your idea might be something different. And it's past 11:30. So I'm just going to finish up answering the questions. I'm going to call it a day. Buy the dip, can't lose. Don't invest in Bitcoin. Bum, 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 bum. He's expecting every week for his selected stock to increase and get called away. Rambles and Brambles. Okay, safe. Need tens of thousands to get started. No, you don't. My grandson started with $50. Okay, it's called fractional shares. Are you worried about these wars? Nope. Are you a stroke survivor? Why the hell would you ask that question? How much is it get to your group? Okay, well, all right. You know what? I don't know what it is with people on YouTube. I'm just going to ignore them. All right? That's it. Just going to ignore YouTube. Stupid questions. So I own 400 shares of Archer. Could do this. Yeah, you could. Now, I'm not telling you to do it. I'm just saying, does it make sense? Okay? If it makes sense, fine. Do it. Brandon, you're welcome. Steve, I started with $50 on OPTT. Okay, Ricky, that's an inappropriate question, but thank you anyway. Okay, is that Skyline Kids? Chris, do you think Blanco fell? I have no idea what it is. Do you think Blanco, the roofing work truck? Okay, I don't have no idea what that is. I'm doing options. All right, cool. Good evening. I'm from Long Island. What would you suggest is a good time frame for trading options? 1 week out, 2 weeks out. Now, Skyline Kid, I know nothing about you. I don't give advice to people I don't know. I always tell people, we're live, fine. You want to chat, drop me your number. I personally will give you a call. I say that every night, and it amazes me. 1, maybe 2 people will give their number, and I will give them a call. It's your opportunity. Ask a question. Drop your number in the in the DM. Send me your number. I'll give you a buzz. All right. Other than that, it's past 11:30. You guys have a great night, and we'll see you again tomorrow. So you guys over here, have a great night. A great night. Tra-la-la. And for you over here, have a good night. See you later. And you guys here on Instagram, see you later. And you guys here on TikTok, see you later. See you later, alligator. F the water crocodile. Now, you guys on YouTube, you have a good